Hello, welcome to Tuesdays with Lloyd. This is your host, Enya, Regional Director and National Practice Leader for Risk Managers Engagement at Lloyd's US. Lloyd's is known for its leadership in pushing the boundaries and creating solutions to meet the needs of our customers. Today's session features two innovation leaders from Lloyd's market, Tina Kirby of Epidemic Risk Solution of Munich Re Syndicate, and Raji of FloodFlash, a Lloyd's cover holder sponsored by Munich Re. As always, our session is meant to be interactive, so please ask questions using the Q&A tool you can find on the screen. Without further ado, please welcome Tina and Ola.
Thank you for having us. I'm Ola, and my background is working in the Lloyd's of London market with an insurance broker called Gallagher for 8 years, and then I moved on to the exciting venture at FloodFlash, where we are looking at how we can hopefully revolutionize the property flood insurance market.
Hi, thanks, Ola. So I'm Tina Kirby, and I started in the London market in 1995 and did a number of different product lines with a couple of different syndicates. Ended up at Beasley running the innovation team there and left in 2019, started with Munich Re March 2020 in the pandemic team, which actually had been going before COVID and offering pandemic and epidemic cover before COVID, but that was quite an interesting moment to join just as COVID hit all our shores. So I wanted to give you a little overview of what we're going to do today, and then I'm going to ask Ola to go deeper into the flood side of things. We've got a number of different parametric solutions out there in the world, but there are many that are hard to understand unless you can get under the hood with them. And we wanted to explain these two options for you as a practical example of how you can make your insurance risk transfer simple and clear, and also ensure a quick payment. So there are differences across different jurisdictions about how you can do parametric insurance, and we'll cover that. But the key to the triggers for parametric insurance is that they've got to be observable, objective, transparent, meaning anybody could see them and anyone could understand them. So there is no debate between the insurer and the insured because it is what it is. And useful if they are timely, so they can say at a certain point in time, this is the data, and locational. So at a certain point in time, at this point in geographically the world, that is where this data was originated from. And those are common across all of the different parametric policies. And we will come back to pandemic, but first I'd like to have Ola talk to us about how that has worked so far for flood in the UK, but it's about to be launched in the US.
Thank you. So I guess to add to what Tina said, there's so many different types of parametric products that are out there. And it's almost sometimes when you hear parametric, it can be a bit of a dirty word. But I think by diving in some of the details in these practical examples, we'll be able to get under the hood as the way Tina said, and really get into some of the details on cases that are working in the UK. But before I begin, I want to talk about the reason sort of why FloodFlash came about. In this particular example, it's the flood underinsurance problem that is affecting the whole world. So increasing urbanization, and that is just like the fact that we're building up on sort of like arable land that could always, in the past, used to be floodplains, and that just keeps increasing. Climate change, whatever your opinion on that is, we know that we're getting more and more extreme weather events year by year. I think in the last decade, we've had 3 significant rainfall and flooding events just in the Europe zone. Population growth means again that increases the chances of flooding, and that means what we've estimated is that there's $70 billion worth of damage that occurs from a flood that happens every year, and only 22 billion of that is covered by traditional insurance. So there's many businesses out there now that are going without adequate cover, and there's this gap that just needs something that is going to give clients and businesses a solution that will help. And we have used a parametric solution in the UK that's gone across the whole property market and done very well. And it's a big shift from what you're used to when you see parametric. Parametric in the past might have been a handful of cases, 20 to 100 maybe in a year if you're lucky. But FloodFlash is now covering thousands of properties in a parametric way in the UK. And that is a big shift in the way that this cover can be used. And there's reasons behind that I'll get into in a second as well. So I can't wait to talk about the fact that we're launching in the US. But it's definitely a good place to start by talking about what we're doing in the UK. And I'm sure we're going to have tons of questions to get into as well. So I will open up this presentation now, and then we will get started.
And whilst Ola's opening the presentation, do feel free to put any questions that you have into the Q&A tool, and then we'll either pick those up as we go along or at the end where we'll have a bit more time.
Yes, please. So here we are. So this is the way that FloodFlash works, and I'll talk about the 3 elements that make it possible. So we have a proprietary Internet of Connected Things sensor that is a sensor that is effectively attached to the property that you're insuring, and it costs a very measly $100 a year to have that sensor. So it's quite cheap in that sense and gives us at the location data on the levels of flooding. So that measures the depths. Then we've got a cloud platform that allows us to access, or brokers to access, our FloodFlash platform and produce quotes and prices on whatever they need. And then also the way that we price our risks is accurate and bespoke. So it gives you a bespoke price for the footprint that we're covering, rather than a general simple price for a general area. So when you're thinking about FloodFlash, it's just in this parametric solution, it's three very simple options. So you are picking a level of cover. So it could be at 6 inches, you want $100,000 worth of cover. So you select that on our system, the cloud platform. Upon doing so, we then send out our installation engineers to install the sensor on the outside of your building. So you know that we're getting that sort of like accurate data on where the flood is at your premises. And then at the point in which that flood reaches the 6 inches that we've got on our cover, you will then receive your payout as fast as possible. And in the UK, we aim to pay those claims within 48 hours. So it's literally as simple as that. And I know in the US, you also have to provide a proof of loss, which is quite a simple document that can be provided after we've made that claim as well. So before I get into this slide, there's a FEMA stat that says that 90% of businesses that don't recover within 5 days of a disaster, they end up failing as a business. And that's because of a lot of reasons that I'll get into in a second. But part of having that payment so quickly that makes this such a USP is that you're able to protect your balance sheet, you're able to pay loans, and you're able to fulfill your customer orders and get yourself back up and running as quickly as possible. So there's a big deal when you're thinking about Parametric solutions in terms of reducing the overall quantum of the loss. Because if your business is able to be up and running within a few days, it means that there's much less business interruption. And that seems to be the biggest factor when you're looking at traditional claims. So just by looking at these 2 images that we've got here, this very quick one at the top where we've managed to pay this claim within a day, which is the average for FloodFlash. And then if you look below, you've got the traditional sort of claims process where they have to assess the claim, and there's a longer process. The client has to make a claim, then the adjuster comes out. So this process can take anywhere between a month to even years in some cases. So all of that time that it takes to then process that claim and pay that claim will mean that the reinstatement process happens months and months down the line. And as you can imagine, what that means for business interruption, what that means for that business getting back up and running. So although you're getting the payment, you're also suffering as a business in terms of getting back up and running. I think everybody knows after COVID how important it is to protect the balance sheet. So diving into this just a little bit more, if you look at the graphic on the right-hand side, we're looking at how we compare traditional and parametric. And the indemnity model is almost, it sounds as if you're getting your full cover, which is sort of like a common myth that we've had to displace the UK market. but there's other ways in which they have basis risk and take out cover, like deductibles, sublimits, caps, co-insurance clauses, average clauses. So with Parametric, it's just very, very simple. Whatever payment you've agreed on your policy, you get. And I've already talked about how this protects the balance sheet and cash flow. Again, back to that claims process, you're looking at days and weeks comparison to months. In the UK, we actually have a famous claim that we paid when we phoned the customer to ask them for their bank details, and they asked us what for. And when we proceeded to tell them that their building is flooding, and they didn't have any idea, and there was no way they could get there because of the roads were closed due to the floods, of course. So this is all about, when most of the clients that we deal with, they kind of have a plan in place about how they're going to spend the money when the event happens. So what you normally find is when a catastrophic event happens, there's a big demand for loss adjusters or cleanup crews, and that adds premium. And the longer you have to wait to get your payment, the harder it is to get access to those services. So it really does help with that speed element again. And then also, I think this is probably more suited to the UK market, because I think speaking to the few customers we've had in our pilot in the US in the early days, there's a lot more knowledge towards what Parametric is, which is great. But the other thing I'd like to say is that although everybody knows about traditional indemnity insurance, I think when you try to explain indemnity insurance to anybody, when you look at the conditions and the wordings that are usually pages and pages long compared to the max maybe 13 pages you get on a Parametric policy, the actual cover itself, it's the easiest for any customer to understand, or any business to understand, because it's pretty much black and white. And once you've got your cover in place, you can start to build your resilience and your business around it. And I'll talk about that in an example that's coming up in a second. So when we're thinking about the US and the UK, there's a lot more similarities than differences when we're thinking about the cover, and we know this because before we decided that we're going to launch in the US this year, which we have. So feel free to get in touch. We wanted to look at what were the nuances in our cover compared to what you can get in the US. So in the UK, there's actually no need for a proof of loss, but that's not a big factor, because we can actually pay you the claim, and we have a simple proof of loss form that you can fill in. I think it's within a certain time period which we can relay back to you, and that means that you can still get that quick payment, and then just again send us back what that proof of loss is in a simple form. In the UK, there's the flood re's available only for, it's like a government-backed scheme like NFIP, but it's only available for residential properties. So that opens up the whole commercial market space to us. So there's all sorts of ways that we're helping customers there. When the US, NFIP can help any business up to a value of $500,000 in asset value, and that excludes BI. And I think for some of the size business that we're talking about here, I think we know that $500,000 is probably dollars is absolutely not enough. So the way that we're seeing businesses use FloodFlash in the US is to either fill the excesses, to apply that BI cover attached to the policy, or to top up existing cover, and all three can happen at the same time as well. So the last thing as well is, in the UK market, we've had to do a very big education piece when it comes to floods. But in the US market, the knowledge of base flood elevation and flood heights is so high. And when we're speaking to customers in the US, they're nice about how flood risk affects their businesses and where the pinpoints are. It's so much easier. So the fact that we've been able to do it in the UK, arguably maybe we should have started in the US, but the fact that we've managed to make this a mass market product in the UK that covers almost every part of this island, it just really proves that it's going to be a really, really big success in the US. So we're looking forward to launching there. So finally, I'm going to read this quote from one of our clients and then talk about why they've said this. But before I start, I think you probably would have never heard somebody talk about insurance like this. And it's just because of the way that parametric insurance triggers and reacts and helps customers when it comes to the claim and the crisis. So if FloodFlash treat you like they've treated me, it will be the best decision you've made in 5 years. And that is Martin Gibbons, who owns Nolan Farm. There's a video on that we will give you a link to when you get this presentation, and you can hear it from him yourself. But Martin had a flood loss in the UK that was less than $250,000. So the insurers gave him $250,000 excess on his renewal. So effectively he had no cover. So Martin was a prudent customer. He invested in resilience. He has a flood plan in place. And he knows that going forward, he actually doesn't need any flood cover until the flood gets beyond 70 centimeters. So he's picked a 70 centimeter trigger. And that's just because of the way that his business is resilient now and the plan that he has in place. He actually didn't need $250,000 cover. He only needed $100,000 cover. So that's what he took out. He's flooded. We paid him the amount. We went to see all of our first claims. It's one of our first claims that we had, I think 4 years ago. And he just couldn't believe that it was almost too good to be true, even though he had the money in his account. But that meant that with that cash, what it does is it reduces the whole quantum of what a loss could be, because he knew exactly how he was going to spend it. He could pre-plan. He knew the level that it would hit. He could see the level on the sensor, and you can see the sensor on your property, and we get that live data from our sensors at the point of loss. And there's many examples we've got like this. Another example I would like to give you, which is less about the property. So we do a farm which has a barn that has attached a sensor to it. And the payout that they've got isn't for the barn itself, because that's pretty flood proof. It's more for their crop. So when the flood reaches a meter, then they get $1 million payout for their crop. And then we have another example of a golf course. In fact, this is a US example as well. And they have their sensor at different points on the golf course, on different clubhouses at different elevations. They've actually have buildings insurance for the clubhouses that they've got and the stock, but they don't have any cover for the greens. And as you can imagine, with a golf course, that's probably where the majority of the cover is required. So they can use that sensor as a proxy on a building to cover the golf course at different points. And something I didn't mention is the way that most businesses are using our product in the UK is to have multiple triggers on the same sensor. And that is where things get a little bit more interesting. But intuitively, as you think about it, as the flood gets worse, you probably need more cover. So you could have multiple triggers on the same sensor. So maybe at 6 inches, it's a cleanup. Maybe at 12 inches, it's hit the electrics and the control boxes, and it's a bigger cleanup and you need some money for BI. And maybe if it got beyond that, that is a catastrophe for your business. And you can almost see how that can dovetail with flood defenses as well.
Well, look, can I jump in with a question there? So it partly comes from the question that was raised from the audience, but also from me, which is you're talking about using sensors, but of course there's satellite data, there's media, there's a lot of obvious signs of the flood. So why did you go for using sensors? Yeah,
we went for these sensors because they were cheap. So at $100 to give us that kind of high resolution data, what we're used to seeing when it comes to parametric tools like this that aren't as mass market focused as we are is things like cat in a box or maybe like satellite data. But those kind of models aren't as accurate when it comes to the lower lying levels of flooding. So something like satellite data would have tens of centimeters in accuracy. And when you're talking about a building that has maybe a 30 centimeter flood, not knowing whether it's 30 centimeters or 100 is a huge difference for that business, as we've seen already. So that's one thing. Also, it's quite expensive to send these satellites into millions of dollars it takes to send these satellites up into the air. So it really does remove that basis risk. When you're thinking about your property that you're trying to cover, instead of having to use local gauges or weather sensors that are covering a wider area and giving you like a rough idea of where the flood might get to, or using a flood gauge or a river gauge to give you a rough idea of where the flood might get to at your business, you as a business want to know that you're covered and your property's covered, and you can see the flood levels in comparison to the sensor. So it gives you a lot more peace of mind when you're thinking about, actually, this is actually covering my property, and it completely removes that basis risk. So we've got examples where a lot of the buildings in the UK, and I'm pretty sure it's the same across the US, where our clients are actually using our cover before they've had any property damage. So you can use it as non-damaged BI as well, before you've actually incurred any flood losses on your property. So I think that's the reason why we've gone with the sensor as opposed to satellites or any sort of like a rough measures like weather gauges and things like that.
And just quickly, is it admitted in the US or is it surplus lines?
This is through surplus lines when we do it in the US. So you use a surplus lines broker. Yeah.
Through surplus lines. And in the UK, is it via cover holders or did they do it directly from FloodFlash's website?
So we sell through brokers in the UK as well, but there is a very small way in which smaller customers can get us a direct quote as well. But in the main, our distribution channel is through brokers and sometimes actually now through insurers, and interestingly, sometimes led by lenders. And that the reason why is if a lender has a portfolio where they're struggling where clients are struggling to get cover for flood risk, being able to ensure that portfolio has flood risk increases the value of the whole portfolio, and then they can resell that, etc., etc. So it's interesting for those parties. Those are our main sort of like parties that we're dealing with when we're doing the B2B.
Yeah, and it's interesting what you're saying about the stakeholders there, because what you said at the very beginning about why we're seeing more floods and what you're saying now about what the stakeholders are asking for different things, those two are very similar across from flood to pandemic.
Yeah, I'm really interested to hear about how this applies to the pandemic. And I think while I was in the midst of it, working at FloodFlash, I was thinking, what trigger could you use? How could this apply? Because I'm pretty sure a lot of business could have benefited for something that was immediate and objective and gave them that quick cover, because we all knew we were in a pandemic.
Yeah, no, and it's a good point. I mean, you can't put a nice sensor on a building for a pandemic, unfortunately. So although the coverage was available from Munich Re prior to COVID, it wasn't bought, and therefore there was this whole sort of stampede for coverage. But when we were in the middle of COVID, so it's like asking for the hurricane cover in the middle of a hurricane. So we have created some parametric triggers deliberately to get away from this is it covered, is it not covered debate that's been going on across the world, including in the US. And the way we've done that is to use the WHO, and they provide three things, because there isn't one moment in time with a disease. And with a flood, you can see it coming and then you see the result in front of you. But with a pandemic or an epidemic that becomes broader and becomes a pandemic, there is no guarantee that it's going to impact you and your business. So the three parts are, first, that it happens in your policy period. That's fairly obvious, but how do you know? So the WHO make a report on each new epidemic outbreak. And by that, I mean where there are more cases than normal. So they know what the normal number of cases are for, say, measles or even for MERS or SARS in a country, but there's more than normal, then they would declare that to be an epidemic. And then when it becomes bigger than that over a number of countries, so what we would colloquially call pandemic, they declare it to be a public health emergency of international concern. And that's our catastrophic line in the sand. So you can't choose how many centimeters. So we could choose number of deaths, but that's partly unpalatable, but also not always equitable, because Zika was an impact on businesses, but yet didn't cause deaths. So instead, we use this public health emergency of international concern as that line that goes from small and probably localized to large and concerning. Because there's the key point, is that we're concerned about a pandemic, so we change what we do. We don't go to work. We don't go to mass gatherings. We are told not to do certain things because the government doesn't want for us all to get sick and to overburden the health service. So we need that sort of line to say it's catastrophic. So that's the first and the second, the when and the what, and then where. So many, in fact, 95%-ish of epidemics are in Asia. But for all the reasons you were saying earlier, Ola, because we have this population growth, because we have greater urbanization, which increases that interface between the wild and the human. So that zoonotic, that jump between animals and humans happens more frequently. And because we are more globally connected, and sadly also because pandemic outbreaks are very linked to climate. So the warmer the environment, the better it is for viruses and bacteria to spread. For all of those reasons, the disease outbreaks are occurring more frequently and spreading across the world. So the where, being the third part, is really important because it could stay in Asia or it could migrate to other countries. And then that's when you'll get the reaction that we've seen from COVID repeating, but perhaps in a slightly different way. You can see in the press, we have monkeypox at the moment. It's not a respiratory disease, but it is spreading and they can't work out how quite you're getting these patches of the monkeypox and there isn't an easy source that they can identify. And so there may need to be some different ways that we approach interacting with people in order to stop the spread if it goes further. At the moment, it's still fairly low level, but that's exactly what the international health regulations are about. They say monitor it, and then if it is bad, you declare it to be a public health emergency. So then the WHO say where it is. So where it is in the world is our where for the parametric trigger. So the when, what, where, now you're covered. It's an outbreak in your policy period. It is of a significant size that it's made a public health emergency, and it is in your country. So now the pandemic is in your country and your policy is open, as it were. But it is a proof of loss policy, even though the parametric triggers, but it is, as Ola was saying, a very simple proof of loss. So we use an affidavit form, which is 1 page, and that then shows that the pandemic did affect you. Now, you can be a hotel in Florida affected by a pandemic that is largely in California, because you may have your guests coming from California, or you may have generally people less willing to travel because of this outbreak in California. So when we say where, we mean the whole of America. We're not picking down to states or towns. So that's how you turn the unpredictable nature of a pandemic into a more predictable pandemic. 1, 2, 3, what's your loss? Here's your money. And we do want to turn that around and guarantee that we'll pay between 15 and 30 days, depending upon where you are and what it is. So it's same theory as Ola was saying around, it's to build that resilience into your business and to make sure that you can survive. So the stakeholders that are pushing our clients to buy the cover are saying, I want you to show me you've learned from COVID, to go forward, but sensibly or informed, stronger and smarter. So yes, we've had COVID. Yes, we want to put it in the rearview mirror, but we also have to recognize that we got to do something about what we went through so that we don't go through it again in the same way. And so we are helping with the ESG elements. Now, obviously the E is that link to climate, but the stronger ones are the governance. So we've learned our lesson. We have some risk transfer and to the degree that we can, some mitigation in place because of what we've learned. And because of that, our business is going to be stronger so we can support our employees, can support our local economy that's dependent upon that business. So it really does speak to the S and the G. And we've had a lot of pressure for our clients from their employees saying, are you a good company to work for? Will you get through another disaster? And this is a really good evidence to say that. Now, there is one slide I've got which tries to summarize it all, which I'll just quickly show you. And or rather, Ola's going to quickly bring that up so that we can see it. And we will share this with you, as we said. So you can see that you've got, unfortunately, a high likelihood of this all happening to us again. This isn't Munich Re data, although our data says the same thing. This is also independently verified. You're looking at 22 to 28% chance of another COVID happening in the next 10 years. And that's the bit that scares me, because we'd like to think this won't happen again. But sadly, the trend is up. So in order to manage and go forward with confidence, we have tried to make this a really simple process with decent amounts of limits, but you can buy very low limits right up to the 100 million limits. And it covers all pathogens or all outbreaks of that size. And it's that quick payment. So like I say, does shield your employees, satisfy the regulars, and safeguard your business generally.
Wow. So, because I guess with FloodFlash, we started with the one trigger, and then over time we learned that actually it might be useful to have 2 triggers. So how are you, especially given the last pandemic, how are you evolving and and learning from what's happened to evolve the cover that you're given. And I'm sure in time you'll be paying claims in a day too.
So that there's not so much people can do to mitigate in a pandemic as there is in a flood, but there are some things, and we've certainly learned that flexibility in your business model, in terms of I can work from my office, but also I can work remotely. I can sell online as well as I can sell in person tangibly. But there's a lot of the governance side of things that I think is where the greatest learning and mitigation can come from, which is we have policies in place which enable us to communicate with our customers, communicate with our suppliers, and have redundancy in our supply chains so that we can source from different places, but equally redundancy in our distribution so that we can deliver to our customers in different ways and enable our employees to be safe. So a lot of learning was around what is safe in a disease scenario, and what is at the right distance, and how do I help people test so they know if it's a sniffle or if it's a problem, and can I then put on site nurses or testing centers or isolation centers, and all of that I think is still being learned and crystallized, but is also what we want to put into the policy as risk management assistance. So we have a sublimit for crisis management assistance and an expert hotline for when the next one comes along, because monkeypox is quite different to COVID, which is a coronavirus, as SARS and MERS were, but there are also other viruses that you need to react to in different ways. So I think it's about knowing where to go to get the information, as well as having built in this recognition of some flexibility around our access routes in and out.
I think we can all agree that during COVID, a lot of it was just that not knowing what to do and the indecisiveness of businesses and what to do next, and having the cash to do so and act quickly would obviously have made everybody's, if whatever business was working, operate a lot better. And then I have another question for you that just, I don't know, I'm intrigued because you mentioned hotels in California. I'd love to know the profile of customers that are purchasing pandemic insurance now.
So it's actually quite a wide range. So we have education, because there was a certain amount of closure, so just obvious loss of income and loss from events. But there was also quite a lot of trying to get students back into work, so a lot of extra expense. So how do we get them back into the school in a safe way? So extra expense and loss of revenue from that side. Healthcare, similar, actually. Open to a degree, but certain things had to be cancelled, but a lot of extra expense in order to stay open and stay functioning. Manufacturing, more focus around the supply chain. How do we source differently, the expense of different distribution centers? And then where I didn't expect it to come from, actually financial institutions, because they and the tech sector and the communication sector generally haven't lost revenue, but what they have done again is incur a significant extra expense. And so there are a number that want to do that. This is driven by the governance, the ESG part. They want to do the right thing and make sure that they've got something to smooth their balance sheet next time. And so they've also purchased, which was a surprise. But we're pretty much sector agnostic. We've got quite a number of new events, opportunities and questions coming to us, ranging from one-off events through to annual businesses across a number of different sectors.
I think that's one of the parts of a lot of Parametric solutions I like the most, is the way you're able to pivot with the payouts and use it in the best way for your business. So I think you mentioned before when we were talking, a restaurant could almost convert their business to takeaway, and as long as that's in the best interest of everyone, they could still earn revenue and operate rather than completely shut down with pandemic. Or with FloodFlash's example, I get asked all the time, what can we cover? And in essence, it's whatever you want, as long as the trigger's there and there's an insurable interest in what could be lost.
You're right, and that's the real benefit. And unfortunately, legally, they don't like us to use the word a bucket of cash, but that's pretty what it is. We're saying you've got something's happened to you, so have a bucket of cash to sort it out, because you will have expense, you will have some impact on your revenue, and we're not going to tell you where to put it. You've got to do the best thing for your
the risk manager, that business, they know that the reason why they have a business is probably like they're forward thinking. they know how they're going to spend that money. And a lot of the time,
Yeah.
it's just, if you leave it up to them, then you're going to get the best outcomes for everyone. And what we found actually, which is really interesting, is that insurers now that are realizing if there's an element of parametric cover in our policy, you have now actually de-risked my whole policy now. And the way in which parametric can work with indemnity, so now the client gets a discount, and also they have the opportunity now to be encouraged to be as resilient and resourceful with their payout as possible. And that way everybody wins, because there's less BI, you're up and running a lot quicker, and you're not giving insurance a bad name by not paying claims.
And I think here is where I can pick up on a couple of the questions. Thank you, everyone, for the questions. There's one around, can you use it with captives? Absolutely. Because to Ola's point, I think you can do a blend really well, where you can use the structure that the insurance company can put together that can help the captive if they need that help in how you structure it and make it compliant with the regulator. But you can also share the loss amount. So it could be a 50-50 share or a 90-10 share, whatever. But then the captive, on behalf of the parent company, is building up its own reserves, building up its own expertise, and the mitigation knowledge of how you can be better prepared where to put the money next time. So it's but parametric and specifically flood and pandemic parametric are perfect for combining with a captive and strategically over time, so that you could adjust how much you buy external risk transfer and how much you do internally. I'm going to ask Ola, I'm going to ask a question that is probably comes to you all the time. What if the sensor doesn't work?
Good question. So we have basically the sensor has a mobile modem in it, which means that it's communicating with us every 24 hours. We call that our heartbeat signal. It's completely self-sufficient. It's got battery. So that heartbeat signal tells us I still have battery, I'm in full working order, and I'm not recording any floods at the moment. So if we haven't had a signal from our sensor within 24 hours, we know something's wrong. And that $100 a year annual fee that you pay covers any maintenance that we might have to do to that sensor. So if we have to go in and replace it, we will. And then finally, if for any reason I have 2 more points. So if any reason the mobile connectivity in an area came down because of the flood, let's say, the sensor has a memory chip inside as well. So it records everything that's going on inside the sensor. So all you'd have to do is then retrieve that sensor, and as soon as, if on the way back to wherever we're going to go, it connects and sends us that data, we can make the claim, or we can retrieve the memory chip and then also get that data and make the claim. And then quite finally, again, floods tend to be quite visual. So you could go outside your building and take a picture of our sensor submerged in the flood, or look at CCTV footage, etc., etc. There's so much evidence that you can do. So if for any reason our sensor failed at the point of loss, we will accept traditional methods of paying that claim. Sadly, it won't take as quick as our fastest claim, which is 5 hours and 36 minutes, but I'm pretty sure it won't take more than a couple of weeks.
Great answer. I think there's an answer, a question here from Dominic around basically the breadth of coverage or the capacity available for pandemic, but I think it's also a relevant question for flood if you're talking about certain parts of the US where we've seen certain companies who were providing flood cover, say in Florida, who've had to retreat or have been unable to sustain offering that cover there because of the catastrophic nature of it. So I think it's a good question across both and or many NatCat coverages that you would do in a parametric way or otherwise. So what is unusual about where the pandemic teams sit within Munich Re is that they sit within the life team. And it doesn't mean they can only do life, quite the opposite. It means actually they can do everything, but they access what the life team access all the time, which is the capital markets. And the capital markets, because life and death and pensions and investment all go hand in hand. And so the Epidemic Risk Solutions team is set up with this ready to go, not yet activated, but ready to go access to the capital markets, which would then supplement the insurance capacity that's available for this catastrophic risk. Because it is a catastrophic risk that is beyond, if everybody bought it, it is beyond what the insurance market could achieve. Sadly, I don't think everyone will buy it. So these are specialist solutions at this point in time. But even that incapacity adds up because it's systemic across the world potentially. So that's why we have this opportunity to reach the capital markets. And you see the same thing using ILS mechanisms and others with other nat cat issues like flood, quake, wind, etc. So hopefully that answers that one. And
just on what you said before about captives, we're actually working with a captive right now in Guernsey and going to present to captives in Guernsey about how we can dovetail with their solutions and offer their clients Parametric. And a very popular search engine, which I can't name, is considering how we might be able to help in their captive and de-risk some of their floods. But they're so used to this kind of model of insurance and the finance market, so it's something that they're actually quite open to using when it comes to de-risking or alternative risk transfer, as they say. But it's becoming a lot more common. As I said, in the UK, it's in the thousands in properties that we cover.
We have 2 more questions. Pat, do we have time for that now, or should we follow up with that afterwards?
We've got another minute or two. Go ahead and take them.
Okay, so I'll answer the one that's around when we use parametric insurance for complex things like pandemics. How do you balance product simplicity and minimizing the basis risk? And for example, using a simple index trigger versus using multiple measures to trigger payouts. The simple, I hope, mechanism that I explained to you is the result of about 5 years of iterating different ways to try to get to what is the most simple way to describe a disease that may progress, that maybe is contagious, that may be very strong and then maybe has a dip in the wave over the summer period, maybe has another iteration because of different variants like we're seeing with COVID. Diseases are not easy to pin down in language. And so we have tried to get this as simple as possible, and we'll keep iterating. So any further ideas you have on how we could make it even simpler, then please do. But we will circulate this slide deck, which has got that one slide on it, which I hope is simple. We haven't found a way to get to one trigger because we need to know when it starts. We need to know if it's big or small, so whether we're covering it, and we need to know where it is. So we haven't found a way to get that to one. I would love it if you came up with that. The one for you, Ola, is around the manufacture of the sensors. So is that just one, or are there multiple? Are you diverse in your supply of that?
Happy to answer. And I think just to add to your question before, when we started at FloodFlash, we only had the one trigger. And I think over time, we've learned so much to allow us to develop the product and create better triggers over time. So I think you'll find that over time, the trigger depths, the triggers and the payouts that you get for all parametric solutions get simpler, easier to understand. You'll have sensors that are a lot closer to the client's business and over time. And then when that happens, it becomes more of a mass market product, like a FloodFlash. So and in terms of the sensors, yes, we have many suppliers. You'll find that actually the idea of a FloodFlash came from a solution that was developed in New York because of Hurricane Sandy and the flooding that affected the MTA subway. And our 2 co-founders used to work at RMS, and they created a cat bond, which is basically the same thing, the $200 million bond, and the trigger was a tidal gauge on the tip of Manhattan. So if that ever breached 8.5 feet, it would pay out $200 million for the subway. And that was deemed the point at which flood would enter the subway. FloodFlash is just like an improved version of that with a mobile sensor. So that technology has been around and just been developed and developed and developed. So it's again back to that question I said, over time, the sensors, the measuring mechanisms, the triggers are only going to get better and better.
Pat, I'm sensing that we need to wrap up here, and I know there's a couple left, but we will share the slide deck with our contact details in. So please do post any other questions across to us individually, and we'd be happy to answer them.
Okay, well, Ola, Tina, let me first say a very heartfelt thank you for sharing your expertise and insight with us today. It was excellent, and so that will do it for us today. We hope you enjoyed the session and that you learned some things you didn't know about parametric cover. I know I did. Be sure to join us for our next session on June 7th, when our topic will be digital underwriting. If you can measure it, you can manage it. And we'll be joined by the Chief Technology Officer from Carbon Underwriting and also the Head of Underwriting from Canopius's Algorithmic Underwriting MGA, VABE. As our session ends today, please take a moment to fill out the survey feedback questions that will appear in your browser. We are always looking for input and ideas from our audience. Maybe you have a topic idea for a future show, or perhaps you have a particular expertise that might qualify you as a future panelist. Anything at all that helps us keep Tuesdays with Lloyd's the best it can be. We are definitely interested, so please do reach out to us anytime at usevents@lloyds.com. And with that, until June 7th, let's all keep staying connected and have a great rest of your week.
Thank you all.
Thank you all.